But at Fundstrat, Sean Farrell is the head of digital assets research, and he's given me some informal sort of targets. One way he thinks of this is that if we look at Circle and its free cash multiple, which now is like 130 times EBITDA, on an equivalent basis, Ethereum's closer to 15,000. I think in the near term, our technical strategist Mark Newton thought we could be seeing 4,000 before the end of the month for Ethereum, but that's not where it peaks. He just thinks that that's the first target. And then I think something, if Sean Farrell's math is correct, then I think 10 to 15,000 actually makes sense too.
By the end of the year?
It could be end of year, it could be sooner. I mean, it just really depends. But that wouldn't be the cap, but that just shows you that's really, a level above 5,000, it would be a decisive, all-time breakout for Ethereum. So I think that's a significant level to watch as well.
Earlier this year, Fundstrat's Tom Lee quietly stepped into a new role as chairman of Bitmine, a corporate treasury firm focused on Ethereum. While many in traditional finance still grapple with crypto's long-term relevance, Lee is already positioning himself ahead of the curve. His belief in Ethereum isn't just personal, it's institutional. Bitmine's strategy closely mirrors MicroStrategy's Bitcoin accumulation playbook, but with Ethereum at the core. The firm views Ethereum as deeply undervalued, especially as Wall Street increasingly embraces stablecoins, driving a pivotal shift in Ethereum's role as both an asset and infrastructure layer. Backing this conviction, Fundstrat predicts Ethereum could hit $4,000 by month's end, with potential to reach $10,000, $15,000 by year's end, depending on market momentum. These aren't speculative guesses, they're based on Ethereum's expanding real-world utility and growing institutional interest. Lee sees Ethereum not just as a smart contract platform, but as a core piece of financial modernization, especially as banks and treasuries begin adopting stablecoins built on its network. In his view, Ethereum is experiencing its ChatGPT moment, a revaluation driven by practical, scalable use cases. Bitmine's approach combines equity fundraising, Ethereum accumulation per share, staking for yield, and volatility as opportunity, all part of an enterprise-level strategy to maximize Ethereum's asymmetric upside. For Lee, Ethereum has evolved beyond a speculative asset. It's now an undervalued digital backbone poised for a major valuation shift. A clean break above $5,000 would signal a new all-time high, but according to Lee, that's just the beginning of what could be a far more profound rise.
Well, I think Ethereum, is a chain that I think is getting a second look. I know that there have been criticisms of it in the past because of either how layer 2s and layer 1s interact or just really sort of progress and upgrades to the network. But to us, I think the real thing we have to recognize as we look at what's happening in the real world is that Wall Street is converging onto crypto, and they're choosing to do a lot of this work on Ethereum because stablecoins have completely changed Wall Street's mind about how useful crypto can be. As we've said, the stablecoins have created the ChatGPT moment for crypto because we're seeing consumers really use it in a viral way. Merchants are beginning to really love it, especially outside the US. And now banks are realizing it's actually a decent business model. We just saw Citigroup even just say that they're looking at creating a stablecoin, even if it's just to manage deposit base, but still it is really Wall Street converging onto crypto. And at the end of the day, a couple things are going to be important. Wall Street wants to find a chain that's operating compliantly in the US, and they want to find a big one and where there's already a lot of real world assets, tied up and on the layer 1. And that's why Ethereum, we think, is going to become extremely relevant over the next decade.
Do you think that Ethereum can keep up?
Yes, and they just have to create the right incentives, between the layer 2s and layer 1s, and make sure there's just not too much gas out there, and that we can absorb that supply. But I think that's where these treasury companies are playing a pretty important role, and they're earning money staking. And I think the reality is that if there is a rejuvenation of interest around any token or any token platform, it also rejuvenates people's creativity and interest in making it more usable. So to us, this ChatGPT moment, which is converging around Ethereum, I think is going to also help unleash a wave of innovation. It's no different than when ChatGPT first swept across Silicon Valley. And this is after everybody had invested decades on SaaS. But guess what? Now there's many venture-funded businesses around using AI and ChatGPT that are exploding and getting to a $100 million run rate so quickly. Well, I think that's what's going to happen in crypto. I think this is a really big moment for the industry to realize that as Wall Street converges and they're bringing a lot of interest and bringing a lot of new users and a lot of new applications, that this could transform actually the importance of smart contracts and Ethereum. So I think Ethereum's sort of dominance could actually grow dramatically.
What's your price target for ETH as we head into the second half of the year?
Our price objectives at Fundstrat. So I wear a couple of hats. I'm the chairman of Bitmine, but I'm also the head of research at Fundstrat. And actually I have a third role, which is the CIO of Fundstrat Capital. But at Fundstrat, Sean Farrell is the head of digital assets research. And he's given me some informal sort of targets. One way he thinks of this is that if we look at Circle and its free cash multiple, which now is like 130 times EBITDA, on an equivalent basis, Ethereum is closer to 15,000. And that makes sense. I think the layer one, as you get into layer one, you should apply a higher multiple to like sort of theoretical usage, because it's the same reason software companies get higher multiples than retailers, right? The more you're getting away from the customer and the more it's pure signal, you apply higher multiples to that business. And so I think in the near term, our technical strategist Mark Newton thought we could be seeing 4,000 before the end of the month for Ethereum, but that's not where it peaks. He just thinks that that's the first target. And then I think something, if Sean Farrell's math is correct, then I think 10 to 15,000 actually makes sense too.
By the end of the year?
It could be end of year, it could be sooner. I mean, it just really depends. But that wouldn't be the cap, but that just shows you that's really, a level above 5,000, it would be a decisive, all-time breakout for Ethereum. So I think that's a significant level to watch as well. At the core is our belief that Ethereum is dramatically undervalued as a token. That, and for the reasons I described, that crypto is seeing its ChatGPT moment, and really the second order beneficiary there is Ethereum. And so acquiring an asset that can appreciate by 10 times or more is a really good use of a treasury. In fact, MicroStrategy, when they began their treasury strategy, Bitcoin was 11,000 and it's 120,000 today. And so I think that's foremost where we're coming from. And some people say, well, why don't you just buy Ethereum outright? Well, an Ethereum treasury company can actually increase your ETH holdings per share by taking advantage of capital markets and volatility to raise capital. And they can also earn money from staking. And for instance, Bitmine initially funded with $250 million of ETH, and that was closed on July 9th or July 8th. And then 3 days later, Bitmine increased the treasury holdings by an additional $250 million. So in just 3 days, doubled the amount of treasury holdings, and that was as of Friday last week. So you can see that there is an advantage to a treasury company, because what you thought you had was of ETH relative per share just doubled in 3 days based on just the company acquiring more ETH. And of course, that activity continues. So I think that there's an advantage to owning a treasury company that is using capital markets to increase your ETH holdings per share.
Tom Lee's valuation model for Ethereum is built on the idea of applying equity-style multiples to the network's usage, much like how investors value high-growth tech companies. A key comparison is Circle, the issuer of USDC, which operates mainly on Ethereum and carries an EBITDA multiple of around 130x. If Ethereum were valued in the same way, as a financial infrastructure layer with real utility, it could imply a price closer to $15,000 per token. This perspective highlights the shift in how blockchains are being seen, not just as decentralized ledgers, but as platforms generating meaningful economic activity and cash flows. At the heart of this transition is Ethereum's role in powering stablecoins like USDC and USDT, which are now embraced by major banks as tools for improving deposit management and settlement speed. Firms like JP Morgan and others are even exploring issuing their own stablecoins, not for speculation, but for efficiency. This growing institutional interest marks what Lee calls Ethereum's inflection point. Much like ChatGPT disrupted the tech world seemingly overnight, stablecoins are driving a rapid reappraisal of Ethereum's real-world value and positioning it at the forefront of the next crypto bull cycle. As this narrative strengthens, Ethereum's distinction from Bitcoin becomes more pronounced. While both assets are gaining momentum, Lee argues Ethereum has more room to grow because of its deeper integration with financial infrastructure, broader use cases, and maturing utility. With regulatory clarity increasing and adoption rising, Ethereum isn't just catching up, it's redefining what it means to be a valuable digital asset.
But to us, as risk appetite recovers, Ethereum and small caps are pretty highly correlated, and I think that that's why Ethereum, in percentage terms, has more upside for the next few years.
In Congress, there are 3 bills on the docket. Is the signing of these bills priced in, do you think? And if they don't get signed, how do you think that's going to reflect in the markets?
Well, there's always going to be an initial reaction, but then, the long-term reaction. I think, nobody can really ever correctly predict how Washington, what path it chooses and what bills pass. But I think the reality is that crypto regulation is vastly improved over what we saw for the last 8 years and 12 years. And so I don't think anyone should be too discouraged by developments in Washington, but they should, of course, watch it closely. And then keep in mind that you can always have some things fixed through either reintroducing items or executive orders. So I wouldn't read too much into whatever happens out of Washington.
But is there anything that you've been watching that you wish someone would ask you about, or that you think is quite interesting that not enough people are talking about?
Well, I've been paying a lot of attention to earning. We're in the middle of earnings seasons, and financials start to report in earnest. This week and next week. But there have been a lot of comments from these financials about stablecoins, and stablecoins are frenemies for the financial industry. So I think that's just something people have to watch out for, because they are both a opportunity, but it's also a threat to their legacy business. So you have to keep in mind that in some ways, the financial industry is one of the strongest and savviest lobbying groups, that they have a role in how crypto regulations can pivot in either direction.
Tom Lee distinguishes Bitcoin and Ethereum not as rivals but as assets with different roles. Bitcoin remains digital gold, a prime monetary asset with a potential valuation north of $1 million if it reaches gold's market cap. Ethereum, however, is where the real economic activity happens. As the largest smart contract platform, it is set to become the foundation for tokenized assets, stablecoin payments, and decentralized applications, merging innovation with significant valuation potential. With AI adoption rising and global finance evolving, Ethereum could serve as the digital settlement layer for everything from microtransactions to tokenized real-world assets, roles Bitcoin cannot fulfill by design. Stablecoins exemplify this shift, representing both an opportunity and a challenge for traditional financial institutions, making Ethereum's dominance both vital and precarious. Wall Street's growing engagement with compliant on-chain finance naturally favors Ethereum's robust and liquid platform. While regulatory uncertainty remains, Lee views the overall trajectory of crypto regulation as more favorable than before. Traditional finance is increasingly shaping blockchain policy, further legitimizing Ethereum's role in global capital market. Lee's work with Bitmine offers a clear case of crypto-native capital management, combining equity markets and staking income to grow Ethereum holdings per share. This approach mirrors MicroStrategy's Bitcoin strategy but adds yield, operational growth, and faster upside potential. Far from a distant analyst, Lee leads one of Ethereum's boldest corporate plays, signaling that Ethereum's revaluation is happening now. If you believe in the future of smart contract platforms and crypto infrastructure, then Ethereum at $3,000 might just be the opportunity of the decade. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.